This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, nononsenseforex.com, and podcast players everywhere. Episode 229 is brought to us by Bybit. Bybit right now, as we speak, for the next month, is having a TradFi trading competition. What does that mean? Pretty much anything that's not crypto. So, Forex, metals, indices. Are you good at trading those things? Good, you should be. Now go make lots of money. But make sure you sign up through my link before you do that because you get so much extra just for doing one simple thing. You can find this link in the Bybit blog, which is down below in the show notes. Read the blog and make sure Bybit is for you. It should definitely be. Then click the link, get signed up, get deposited, get trading, get winning. Because you're going to see right away with Bybit membership has its rewards. It is the 10-Minute Contrarian Podcast, and it's also another Recession episode. We seem to have these about once a year now, and I think that is the frequency at which we should have them. Because we get closer to one every year, and we should absolutely be prepared for one for a couple reasons. One, most people will not be, and simply being prepared will elevate us past literally all of these other investors just by taking the steps now that they won't, or that they simply don't know how to. Second, because of all this, a recession is exactly how we contrarians end up on the right side of the great wealth transfer. And we're already doing this by what we currently hold. But that recession really is the moment we're all waiting for. Most people are dreading it. We are not. We are absolutely not. But when is it coming? That's just like any question that starts with the word when. We don't know, and so we're not even going to try and time it while every other idiot on social media just continues to get it wrong over and over, yet still has a presence on social media. These people on social media are what I like to call the mushy middle. Now, you've heard me mention this term on the podcast many times, I'm sure. If you weren't around for the definition, or if you can't figure it out on your own, let's go ahead and define it right now so I won't have to do it later. When it comes to making money in the markets, there are two correct ways to do it. And they are really the two time frames on the opposite ends of the spectrum. The one all the way to the left is trading. We prefer the daily chart here, or I should say I do, and most people who follow me do. But you can use any time frame you want, really. But if done right, with the right tools and the right structure and the right psychology behind it, more important than anything, you can gain a forever, lifetime advantage in trading. And if you didn't know, the majority of my YouTube channel is dedicated to this very endeavor. Now, on the other side of the spectrum, all the way to the right, is what we like to do here as investors. Now, it's a bit counterintuitive when you don't have, millions and billions of dollars to invest with, but the method can be used anywhere, and whether you have $20 to your name or $20 billion to your name, it doesn't matter because the best way is still the best way. And that best way is, no matter what you're investing in, to have at least a 5 to 10 year time horizon in which you will allow yourself to wait for this investment to really play out the way it should. Because here in contrarian land, that is, or can be, how long it takes for some of these investments to play out. Now, the worst part is we don't really know. Sometimes they play out right away. So, for example, back in 2020, when I first mentioned uranium on my YouTube channel, you had about a month to get your positions in before that thing took off in its very first run-up of its overall life cycle. And then you had about 5 years after that before it took its second major run-up this year. That's just how this shit goes. But those of you who have bought and hold, it's absolutely 100% worth it. If you take away uranium, something like SWE, which I mentioned here on the podcast, you had about a week before that thing took its run. But then you have things like copper mining stocks, which, I mean, that could take another 3 to 5 years before the market finally gets the picture and understands that it's just like silver in terms of supply and demand, only worse. And I don't care how long that takes. It's you guys know I like to quote the movie Idiocracy. My mentality on copper is a line from that movie. It's like, hey, I could wait all day, baby. Like, I don't care how long it takes. 8 years, 10 years, good. That's 8 to 10 years more I get to stack copper mining stocks. So you really have to embrace this mentality to make the most out of this podcast. Because as the majority of you know, it is absolutely worth it, because we only have to win about 15-20% of the time to make money in our investments the way we do them, with all the asymmetry that we're looking for and the asymmetry that we go after. However, we win like 80-90% of the time here, so it's extraordinary if you really get it down. But you have to adopt the time frame mentality first, or else none of this works, and you get stuck in the mushy middle with almost everybody else. The world's best traders are not there. Warren Buffett is not there. All your big billionaire venture capitalists, they're not there. But most of Twitter and YouTube is. And I've always kind of wondered why. I have my suspicions. Either these people are already there themselves, or they're not, but they realize most of their audience is, because this is simply where most people like to hang out, and they need somebody to cater to. Now, that latter is pretty evil, but again, I don't assume to know these people's motivations. But just know, because I'm sure you guys follow a lot of these people and you see what they're saying and talking about all the time. Just know, I've said this before too, they are not like us. They do not win as often or as much as we do. They lose a lot more because they are stuck in the very place where most people who lose money exist. And I must remind you, contrarians, do not step foot in this mushy middle, or else none of this is going to work. It's not going to make any sense. This episode is not going to make any sense. Future episodes are certainly not going to make any sense. And you will not be able to participate in all of this winning if you can't even get this part right. So just know, when you see all of this manufactured doom and gloom from social media, know two things. One, they're eventually going to get it right. Two, it doesn't matter, because things like this don't really apply to us because we are already prepared. We are not only positioned for something like this, we are sitting here making really good money while we wait. I mean, tell me this is not the best of everything. It is. And if you're still a little bit confused as to handle something like the upcoming recession, stick around till the end of the show. You guys know that's where the solutions portion sits. Now, don't be a child and fast forward to it, because that proves to me and proves to yourself that you by nature just don't have the patience to invest this way, because it does take a lot of patience. That's the one trade-off. But right now, there's a bit of a dichotomy in terms of who is bullish and who is bearish. I have not seen a dichotomy like this in some time. Usually the majority of people are over to one side or the other. Right now it's about half and half. You saw a bit more doom and gloom earlier this week when the crypto market fell. Funny that too. All the people who were very quiet about the rest of the stock market, for example, all of a sudden kind of come out of the woodwork and say, well, actually, things are actually not that stable. We should be really careful. It's like, bro, that chart looks exactly the same as it did last week. Where were you last week? But anyway, enough of the mushy middle people. Let's talk about figures on social media who actually know what they're talking about, and who know how to take the correct approach that we take here on the show as it pertains to investing. So on the bull side, you have people like Raoul Paul, Mike Alfred, Tom Lee, who have built their reputation on being directionally correct. Now, in terms of actual investments, sometimes they get them right, sometimes they get them wrong. Raoul Pal is famous for going way too long on Ethereum right at the wrong time. But if you actually knew the whole story there, I think a lot of people were being very unfair to him. Because directionally, he is usually right on top of it. And we've talked on the show before. He's pretty much saying you have about 5 years to make as much money as you can before things really start to go sideways. When things like population decline, AI, all start to really matter. But until then, it should be nothing but long-term prosperity. So take advantage of that. And the more and more I look at it, it does make sense. Now, there should be definitely a recession in those 5 years, but in the span of 5 years, I would absolutely expect the market to be bullish, and I am positioning myself for that. Mike Alford's been incredibly successful in almost everything he's invested in, and Tom Lee is famous for, in my opinion, being the only guy on CNBC who ever calls anything right. And now he is becoming the Michael Saylor of Ethereum, which is quite interesting. Now, all three of these people I mentioned are crypto guys, which I think is also very interesting. They are not specifically Bitcoiners, because Bitcoiners have a lot in common with the gold community. They are normally doomers because it's in their best interest to be. But I feel like with the three I've mentioned, they have very good track records in terms of long-term predictions. And I like the fact that they're bullish. Let's look at a few more details that support this bullish thesis, at least when it comes to what to expect the rest of this year and maybe 2026 as well. So, for example, we are in a rate-cutting cycle. When you cut rates, more money comes into the stock market, or more money is allowed to come into the stock market, for example, and normally does. And a rising tide lifts all boats here, because nowadays, people don't just put their money into the stock market. They put their money into the crypto market as well. And they're actually starting to allocate more money to gold, which you think would normally be the antithesis of a rising stock market. But we've seen recently it really hasn't been. And we'll talk about that in a moment. But I think for anything that's not called cash, nowadays, interest rates going down in the United States is mostly going to be a green light. I said mostly. Stay tuned. But because of this, what normally coincides with interest rates dropping is quantitative tightening, QT, in the United States, has officially come to a close. Chairman Jerome Powell said this himself. And there really is no middle ground here. We are either in a tightening cycle or we are in an easing cycle, quantitative easing, QE, money printing, for the purpose of going into the markets, which in turn makes those markets go up. And interesting enough, all during this QT cycle, we didn't really have a pullback hardly at all in the American stock market. We probably should have, and I guess we did back in 2022, but overall, we really haven't. And this is a term we like to use on the show called sour divergence, the opposite of sweet divergence, but just as positive as sweet divergence. Sour divergence is when things should have gone down and given us a cheaper price, but they didn't, which shows incredible strength overall and is probably something you want to be on board for when the next bull cycle begins. I don't know about you, I like strong investments as opposed to weak ones. And how they perform when things should have gone down, to me, speaks volumes. So those are a handful of bullish reasons. I'll add one more. And this is something we've talked about before, but I want to put a caveat on this. I don't think a recession is coming anytime soon, simply because there are just too many people talking about it. And that's not how recessions work. Recessions, historically, only happen when almost everybody is on one side of the boat, and that side being the extreme bullish side. And then a black swan happens and takes us down. like the dot-com crash, like the housing crisis, like COVID. They don't happen because a bunch of people are calling for it and then they're right. That's historically, at least, that's not how it's ever happened. So unless this psychological phenomenon just stops being correct all of a sudden, I can't see a bunch of people saying we're going down and then we go down. Now, what's interesting about what I just said is if you want to argue the other side of that, you can say, well, and we've talked about this on the show too, now is a very different time. Everybody says, be careful when you say this time is different. Well, this time is different in one major sense, is that in modern day, unlike 2008, definitely unlike 1999, 2000, we can all talk to each other now. And no matter what's going on in the market, it's always going to be fashionable for somebody to make their reputation being the guy who is on the other side. Just blind contrarianism is what I call it. Not thoughtful contrarianism like we like to practice here on the show. No, just contrarian for contrarian's sake. This is my Michael Jackson theory. I said long ago when Michael Jackson died, I said to anybody who would listen, I said, there will never, ever be anybody in the world ever again who is this universally loved. Like, we'll never, ever see it. Now, there might have been Michael Jackson detractors back in the day, certainly more towards the end, but we didn't have the outlets for those people to be heard like we do now. If he was around now and at the peak of his success, you would see millions of people who just didn't like him for whatever reason, and those voices would be heard. And a lot of those people would just simply be pretending not to like him just so they could be a part of a certain group or, back to blind contrarianism, whatever the case is. So my point here is no matter what's going on in the market, no matter how great it is, you're still going to have your share of loud, negative voices out there. So this whole idea that a recession's not going to come until everybody's over to the positive side, I don't think it's going to play out that way anymore. Social media is just too big, and humans are going to human. So even though what I said earlier was true about you got to wait till everybody's over to one side, maybe don't use that as a metric. You might be tempted to with all of the bluster going on social media, but again, most of these people are not like us. So why are you listening to them? Why are you giving them any credit for anything? But anyway, that is the bull side. Those are the main points of strength, I would say, for the bull case going forward. The reputation of the people you have on that side right now, combined with what's going on in the world as we speak right here in the middle of Q4 2025. And now for the bear case. So I think really there are equal amounts of intellectual strength on both sides of the argument here. On the bear side, you have people who've also been very correct in the past. Your Luke Gromans, your Jeremy Granthams, and they have laid out very intelligent cases for how we just can't keep doing this anymore. There will come a time to pay the piper, and there's nothing we can do about it, and that time is coming very soon. Like if it happened tomorrow, these guys would not be surprised. Now let's look at some of the reasons why. If you remember when I was talking about the bull case, how interest rates are coming down, and everybody's like, oh yay, interest rates are coming down, that must mean bullishness. Might I direct you back to the chart we love to reference all the time on this podcast? For those of you who are new or who have forgotten for some reason, I'm not going to link it. I want you to look it up. Go to Google and type in St. Louis Fed rate chart, and you will see a chart of interest rates and how they have risen and fallen over the years. And you will also see vertical shaded areas in gray, which denote recessions. And you will also notice, since the early 1980s, you could actually time the recession by watching what was going on with interest rates. So anytime interest rates would rise and then flatten and then start to fall, at some point in that falling cycle, cutting cycle, which we are in the middle of right now, that is exactly when every single recession would happen. So as soon as the flattening effect was over and rates started to fall, at that point, it was only a matter of time. And we are in the it's only a matter of time period right now. And every time rates fall, we get closer and closer and deeper into that, oh shit, it's probably going to happen any moment now, period of time in our financial history. And to reiterate, I say this every time we talk about the chart, this confuses people. Well, with interest rates going down, that's generally a good thing, like you just said. More money gets to come in to the stock market. It's easier to borrow money. These are generally bullish things. Why does it always end up crashing the economy? Well, it's because the lowering of rates is not what does it. It was the rising of rates that happened before. And there is a lag effect. And my theory has always been how the people in charge know exactly what I just said. They know it's coming, and they know the rising rates were the reason why. And it's only a matter of time. And so what they do is they get ahead of the cutting cycle in order to make the upcoming recession last for a shorter amount of time than it would otherwise. Now, maybe I'm wrong about this, but I think history says that I'm probably not wrong about this. But that's what the chart's doing. If you want to draw a little circle that says you are here, the recession is coming at any moment now, and we should not be surprised if it does. But let's continue on with the bear case. So the people, actually individual people I have mentioned, the esteemed, successful people, your Raoul Paul, Mike Alfred, Tom Lee, Luke Groman, Jeremy Grantham, like I said, they are held in very high regard for good reason, but there is a level above these people, very clearly above these people when it comes to the investing game. And let's see what they're doing. Let's start with Warren Buffett, the greatest investor and also, in my opinion, the greatest market manipulator of all time. Warren Buffett, right now, has a higher percentage allocation of cash in his portfolio than he has ever had before. Do you think this is by accident? Or do you think he might actually know something that most people just don't know? This has always been the case in the past. He's been wrong about some things like gold or Bitcoin, for example. But when it comes to market direction, he is not somebody you ever want to go against. RIP to those who have. And while everybody is talking about how awful cash is, and they're not wrong, he has more of it now, not amount-wise. We don't care about that. Percentage-wise, that's the metric we're looking for. He has more cash percentage-wise in his portfolio now than he ever has in the past. And unlike mushy middle people, which Warren Buffett certainly does not associate with, he is doing what we are trying to do here and position ourselves to take advantage, full advantage, of the next big market downturn by stockpiling cash. Because remember, if it was this easy, everybody would do it. But the problem with market downturns is everybody loses everything, so they don't have the cash to take advantage of all the added value a market downturn creates. But Warren Buffett is not only positioned for something like this, he is more positioned for it right now than he has ever been his entire life. A life and a career that spans a lot of years. So I don't know, that doesn't sound tremendously bullish long term. Or I should say at least short to midterm. And then if you look at what sovereign nations are doing, again, some nations are smarter than others, I guess, with where they have allocated their money, but still not something I, as an individual plebe, really want to sit there and think, I'm smarter than these guys, that I know things that sovereign nations don't know. That's absurd. No, I want to know what they're doing. And what they're doing is stockpiling tremendous amounts of gold. Gold, by the way, which is the ultimate defense for just about everything, which is why we like it so much here. I mean, if you want to look at a chart of gold allocation by central governments, it goes straight up, like not even up and to the right, like straight up, vertical up. It's never done this before. What on earth are these governments preparing for? I don't even know if I want to know. But they're doing it, and we can see what they're doing now in 2025, and this is to our benefit. We should probably be listening. I am. Now, I also know is not just one reason why they're stacking gold. There are two. One is I'm sure they are getting ready for whatever's coming. Two, actions have consequences. And over the last 5 years, we have seen a couple very important social covenants broken. One is between countries, and the other is between governments and their citizens. The first one between countries is what the United States did to Russia. They froze all of Russia's U.S. Treasury assets when Russia invaded Ukraine. I think long term this is going to end up being a very, very big mistake, because what it said to the world is U.S. Treasuries used to be a very safe place to be. But if the U.S. can just come in and fuck with them whenever they want, now they are a lot less attractive. Because why would you ever want a foreign country to be able to manipulate your money like that? Or just to completely take it away from you? No bueno. So they started reallocating a lot of their wealth into other assets, mainly gold, which is the one thing nobody can mess with. So it wasn't all for a very bleak future. It was for that too, but probably, where do you want to put the line? Maybe half and half, 60-40, 70-30, doesn't matter. They know something. And I just don't want to be the guy who fades and goes against not only Warren Buffett, but entire sovereign nations. That just sounds like a terrible, terrible strategy. Oh, but the other social covenant I forgot to mention was back when we saw Canada and their approach to the people who were funding the trucker protests back in 2021. We saw that when times get even a little bit tough for them, they will actually, a fully developed first world Western country, if this happens in a third world dictatorship somewhere, nobody's surprised. But here, we saw that if government wants to, they can actually go into your bank account and take your money away from you. So just like the United States did to Russia, Canada did to its own citizens. And to me, these are really the two events that woke a lot of people up and started driving people towards assets that governments can't fuck with. Because we've seen when times get even a little bit tough, not even like, holy crap, huge recession, Armageddon type stuff. When you do one thing these countries don't like, your assets are no longer safe. So this also tells me that if we do see a big economic downturn, and whatever knock-on effects come from this economic downturn, I certainly want to have money outside of the system. So this has become part of my overall recession strategy too. If you're going to plan for the worst case scenario, not just in terms of the overall markets losing value and going down, but the things which could happen as a result of that. Because who knows? The demographic collapse is very real. I posted on X a while back showing that it's over 40 countries now that have officially crossed that chasm that are not only declining in birth rate, almost everybody's declining in birth rate unless you're in Africa, but they are now to the point where they are losing population every single year. Resources, as we know, are getting a lot more finite because the demand for them, for the technology we see going forward, is so heavy. And during globalism, the one benefit from it was there was never a shortage of resources because if you didn't have them where you were, you could just always get them from somewhere else. Well, that has all gone away. And if you don't have resources, it's kind of the same as not having food. You get desperate, and you're going to have to go find it somewhere. So I see all of these things coming in maybe the next 5 to 10 years. I just don't know how soon. So this leads us into the solutions side, at which we should really be prepared for everything, and we should be prepared for everything right now. I'm not sure what you're waiting for. We've been talking about this ever since this podcast began, so we're going on 4 years and plus. And when you've done this successfully, contrarians, understand that it really doesn't matter when the recession hits. Almost everybody out there who has any care about the financial world, all of those people in the mushy middle, they're really concerned about when this is happening. Like, oh my God, it's happening now. Or, oh my God, it's not going to happen for a while. What are you so worried about? Who cares? If you're prepared for it right now, it doesn't matter when it happens. It could happen tomorrow. Great. It could happen 8 years from now. Great. I'm ready. And I hope you're ready too. I think if you go back to the episode where I talked about how I allocate my portfolio, trying to get as close as I can to 25% gold, 25% Bitcoin, 25% assets, which includes things like other precious metals and altcoins, for example, and 25% cash, just so I can do what Warren Buffett does and be ready to take advantage of the downturn whenever it does come. And if it doesn't come for a while, great. I got cash I can deploy elsewhere if I want to. But you got to have the cash first. You can't be Mr. Anti-Cash, like a super gold bug or like a Bitcoin maxi would be. It just doesn't make a lot of sense. But I think that just on the surface, without even going into detail, the best way to make sure you're positioned for something like this is to have your money allocated that way. Because this way, really, no matter what happens, 3 of those 4 things should benefit you. In a recession, for example, I think those 3 things will be gold, Bitcoin, and cash. If we remain in a bull market, the 3 things that will benefit you are gold again, Bitcoin again, and your assets. Now, a lot of mushy middle people might see this and say that you're leaving money on the table by doing things this way. And maybe we are, but it's not about that. That's a very amateur way to look at things. Because those same people who are saying those things are going to get their asses handed to them when the market does finally drop. So all these people talking about opportunity costs and things like that now are just going to lose all of it and then some during these financial downturns because they just simply did not prepare for it. And you have to remember, most investors now weren't even investing back in 2008 during the last real economic downturn. So they don't even know what it's like. They can't even remember a time in their own history where investing looked very different than it looks right now. And those people are going to get absolutely washed when the recession comes. We, for example, or at least I can speak for myself, I'm looking forward to it. Recessions are not just buying opportunities, they are generational buying opportunities. And I feel like, I hope I'm right, I think I'm right, I feel like I am very not only protected for something like this, but also positioned for something like this, positioned to take advantage of it. Now, if for some reason you would like to be positioned more and you just don't know quite which way to go right now and you have to pick either maybe gold or Bitcoin, for example, I don't know if you've looked at this chart lately or if this is a chart you look at all the time, but go to your monthly chart, which is what we do here on the show. We had a whole episode on it if you'd like to go look. Pull up your monthly chart on gold versus Bitcoin and tell me what you see. The chart right now is actually skewed very heavily in favor of gold. If you take it from a classical technical analysis standpoint, gold just made a lower high. And I would be willing to bet that your indicators, your algorithm, is just about to or has already pointed bullish. Now, as we know, charts are not correct all the time, but if you do it right, they are correct more than they are incorrect. And since gold is more defensive than Bitcoin is, maybe this is the direction you might want to be heading. Or maybe it's time to point your focus towards something like precious metals. Not financial advice, but this is currently what I'm doing. I just tweeted last night that I am buying more physical silver, and that's just where my cash is going right now. I'm actually going to end up being a bit cash low, but that's okay because I earn in cash. So if I just chill out for a little bit, we can get that cash back to where it needs to be. And then I'll be closer to that 25, 25, 25, 25 that I am personally aiming for. But if it comes to what do I prefer to buy right now, I'm going to tilt towards precious metals. And I'm still extremely bullish on silver. Just go one episode back if you want to know why. But the overall point of this episode, contrarians, is that, look, there's equal arguments on both sides, I would say. But history says that a recession is coming. Probably coming a bit sooner than later, but again, when doesn't really matter. Just make sure you are positioned to not fear the reaper. If anything, welcome the reaper into your home and say, "Sir, welcome. I've been waiting for you, and I'm so glad you're here. Let's dance." I know that whole scenario sounds crazy, but God forbid you're actually properly prepared for something like this. It's not crazy at all. You were just smart. You were just early.